I hope you've seen the preceding 4 videos that I've done on super micro computer and the predicament they find themselves in. On my last video, I got the comment, "You act like you know something that no one else knows." No, that's not true. Supermicro has been very upfront about their situation. We know that they have missed their filings of their 10Ks and their 10Qs since June of 2024. We know on February the 11th, they put a very detailed information about the restructuring of their loans and what they are going to do in the future. But the reality is that so does the institutions that own 50% of this stock. Vanguard has an exposure of $3.3 billion of Supermicro stock. BlackRock, $2.2 billion, and State Street, $1.1 billion. Well, if you're them and you believe that Supermicro's in trouble, do you go to your desk and say, sell, sell, sell? Well, no, because if you do that, the price is going to fall out. So what they're counting on is you didn't read the document. So you don't know what is looming in the future in 2028. They've got plenty of time because you haven't taken the time to read the information, to do the research, so they can buy 1 share and sell 3. For probably the next 6 months before you and I and the rest. No, I've woken up. Before you wake up and say, this is a dumpster fire. And it's got a atom bomb in the bottom of it that will explode the first time in February of 2028 and then will destroy the dumpster on February of 2029, because it's all there. The reality is, folks, Supermicro has not filed a financial statement since June of 2024. But if you'll go back and look at that statement, you can learn some things, and you can start to put the picture together, and then the picture came to fruition or complete with the disclosure that they made on February the 11th, just 7 days ago. And again, be aware, if you're Greg Davis, the CEO, the head investment officer of Vanguard, you cannot reduce your exposure of $3.3 billion in 1 day. You can't do it in 10 days. In 7 days, you're going to wait and see if, in fact, the Supermicro does file their 10K and their 10Q with the NASD and stay listed. If they don't, the dumpster fire starts. And Greg knows that. He knows that. But he also knows that in the near future, he's got to potentially liquidate his position. Now, I said there is a money-making opportunity here. Anytime there's ignorance in the masses, there's a money-making opportunity. And the reality is you have not read that document that, here, I'll show it to you. Supermicro has disclosed everything. This is the press release that they put out where they said they have announced a private placement for $700 million of new convertible notes at 2.25 due in 2028. And everybody has had the opportunity to read this. The reality is that Vanguard, the largest holder, just got this on February the 11th, much like we all did. So they're sitting and they're going through this and they're coming up with the new information that this new $7 million loan has a premium of 50%, meaning that when it falls due, it doesn't fall due for $700 million, it falls due for $1.4 million or billion dollars. And they are just reading this like many of hopefully you read it and said, hey, there's something here that we need to dig into deeper to see what a loan that is they're taking out for 700 million is going to look like on their balance sheet when it has to be paid out for 1.4 billion after they've paid 2.5%. 2.25% for the preceding, what would that be, 4 years. Then you come over here, and it goes through all the details. They are hiding nothing. Then it comes over here and it tells you about, oh, but wait, we have another loan that we amended that used to be a zero interest loan. This is probably the loan that paid off Bank of America and Kathy Bank when they looked at their books and saw that their auditors, two auditors, had walked away from them and said, no, we don't want that loan on our books anymore. Supermacro, you need to pay it out. So Supermacro went out and paid the loan off with a private placement that at one point had a 0% interest rate. But you can see here they have modified that 0% interest rate to 3.5% interest, and with a premium of 105%. Well, what does that mean? Well, we don't really know what the amount of this loan is. I'm suspecting it's somewhere between 1.7 billion, the long-term note or the long-term debt that they're showing on their books as of June of 2024, or it could be that new financing that they took out for somewhere around 3.26 or 65 billion. And so the ending note in 2029 is going to be somewhere between $3.4 billion that is due on one day, or it could be as much as $8 billion that is due in one day. So the question now becomes, how does that affect Supermicro's balance sheet when those two loans come due, one in 2028 and the other in 2029. So what I am proposing to do is, why don't we do an amortization schedule and basically say this is what Supermicro is projecting their income to be between now and 2029 on a year-to-year basis, on a quarter-to-quarter basis, and as a result of these loans and their payments, whether it again be here 1.4 billion in 2028, or over here, whether it be somewhere in the neighborhood of 3.4 billion or maybe 8 billion, how does Supermacro fare? That's the question. And again, this is the question I'm asking. I hope you're asking. Okay, now you understand maybe the structure of the loans and how the dumpster is just starting to get lit up. Now, the other thing you need to understand is the books that were filed in June of 2024, and see if you can kind of put together what the total exposure just might be. So to do that, let's go to Seeking Alpha and bring up their books and look at their balance sheet and look at their cash flow statements and see if we can figure out, well, I've already figured it out, what is the money-making opportunity here. This is Supermicro's cash flow statement. The last time it was produced was in June of 2024, and you can see they showed net income of $1.2 billion. Their income from other operations and other activities was a negative 3.6 million. So their total cash flow from operations was a negative $2.479 billion. And then we come down and we see, well, how did they operate? Well, this is cash flow from financing. So that they raised $3.911 billion from financing. I would assume this was the outside financing that they received, that they just refinanced this last week, and that gave them a net cash flow positive of $1.229 billion. This is what they're sitting with, and this is the reality. Now, we've gotten no new books from Supermicro since this report was filed, so we don't really know what their long-term debt is. We can come over here and look at their balance sheet, and we can come page down to find their long-term debt, and it tells us here that their long-term debt at this filing was $1.77 billion, and then they had a short-term debt of $402 million. Now, the other issue that people are questioning about my analysis is how many outstanding shares they have. I have never contested that it was anything different than 586 million shares. But if you'll come up here, you'll see what is their common stock. And as you can see, they made a tremendous jump in 2024, and their total common stock is 2,827 million shares. Very different than this. Why is that? Because they took out a convertible loan, and that convertible loan had to have backup shares somewhere that the borrower could access if, in fact, Supermicro defaulted on their loan. And there it is. That's where those shares sit, that if they default on their loans, the borrower can go grab those shares and sell them on the open market. Where's the money-making opportunity? Just follow what Greg Davis is doing. He has to push that stock price up, or at least make it stable as he reduces his position. So what I'm going to do is every morning look and see, is anybody reducing their positions in Supermicro? And if they are, how much? Because eventually, I believe, this is my belief and my belief only, when it comes to January or February of 2027, Greg Davis doesn't want any Supermicro on his books. And when it comes to February of 2029, Greg Davis wants to be as far away as from Supermicro as he can, because that's when this thing's going to explode, unless the tide turns another way. And what do I mean by that? Well, if you'll do some more research, you'll find out Amazon has stopped buying Supermicro's servers. They're buying the parts, just like Supermicro is, and putting them together because they've had bad experience with Supermicro. If you do a little more research, even more recently, you'll find that Elon Musk has, as he's building his mega data center, he has switched from Supermicro to Dell, and then more recently has entered into a sizable contract with Hewlett-Packard. That's why I bought Hewlett-Packard today. So that's where the opportunity is. Number one, there's money to be made on Supermicro as Greg reduces his position and has a motive to push that price up so that he can get out at as high a price as he can, because at some point it's going to drop on him. So he needs to make exponential growth now while the market is totally ignorant by pushing that price up and selling 3 for every one he buys. And then when the market wises up, and that could be as soon as February the 25th, if Supermicro does not meet the requirements and becomes delisted. If they become delisted, the dumpster explodes. So you do what you need to do. Now, what I need to do is take it the next step. And that is to say, I need to build a amortization schedule that programs in, starting today, if Supermicro is paying the interest on these loans up until February of 2027, what is that going to affect their stock price and their earnings relative to the liquidate or the cost of the interest? And then when the fire explodes for somewhere in the neighborhood of 1 point, what would it be? The loan is for 700 million. The payoff is 1.4 billion due in, it looks like, February of 2027. How does that affect the stock price? And then a year later, when the note that we don't know, is it 1.77 billion or is it 3.65 billion? We don't know that. But what we know is that dumpster's going to explode. And unless somehow Super Micro puts Dell and Hewlett Packard out of business and Amazon can no longer build their own servers and has to come to Supermicro. I don't know how they would do that, but then maybe you do. Okay, now the next thing I'm going to do is build that amortization schedule. And when I do, I will share it with my tribe members on my website, Best of Us Investors. It will be under my cheat sheet and my 3-year projection program. And you'll know, if you have access to it, before the end of this week, what the amortization schedule tells us and what the price of the stock will most likely be year by year between now and February 2029. Okay, this is a lot of fun. This is what I enjoy about the stock market. If you can get a piece of information that puts somebody of huge size, Vanguard for 3.3 billion, BlackRock for 2.2 billion, and State Street for 1.2 billion in a position of jeopardy, and you can profit off of it, you can make a lot of money. Let's dig into this deeper in the future.